What's going on, guys? Welcome back to another video. In this video, we're going to be going over GameStop, ticker symbol GME, and their massive short squeeze that has been happening over the past couple of weeks, along with some of the other companies that could possibly have a short squeeze in the near future. So we're going to go over exactly what shorting is. We're going to go over some terminology like float, short float percentage, just to show you exactly how this is possible and explain exactly what is going on. We're also going to go over some ways that I think that these short squeezes are going to fundamentally change how the market works going forward. So if you guys enjoy the information that I provide for you in this video, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible. You get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and how I am trading them. So let's start off with the basics and explain what exactly is shorting. So you guys all know that you can make money when a stock goes up, but there's also three main ways that you can make money when a stock goes down. So one of the ways is buying puts, which is a bearish strategy in the market. Another way you can make money when stocks go down is selling calls. And then the last way that we're going to really discuss in this video is shorting. So essentially what happens when you are short a stock is that you are borrowing shares from a broker and collecting proceeds from selling shares of a stock that you do not own in the hopes to buy it back in the future at a later price. So if you guys want to take a look at an example, just imagine that you are going to be short a stock at $10. So you're only going to do one share in this example. So you are going to sell that one share on the open market, but keep in mind that you do not own that share. So you do need a margin account in order to be short a stock. So if the stock ends up going down to $9 and you want to close out your position, you would end up using 9 of the $10 that you collected for the initial short position, and you would buy back the stock that you sold to close out your position, and your profit would be $1. On the other hand, if the stock continues to go up, your max loss is unlimited and your max gain is capped. So when we think about our max gain, if we're looking at a $10 stock, for example, you would make your max profit if the stock went to zero. So if that $10 stock went to zero, you would not have to buy back at all and use any of the proceeds of the initial sale of stock. You would be able to keep the entire $10 proceeds of the sale. But if the stock continues to go up, since you are using a margin account, if the stock goes up to a certain point, you are going to be hit with something that's called a margin call. So what happens when you are hit with a margin call is you either have to deposit more funds into your account to maintain the margin requirements, or you have to close out your position entirely. Now, that's what we've seen in this GameStop short squeeze. The individuals and the institutions that have been short GameStop have not been putting money back into their accounts in order to maintain their margin requirement. They have actually been buying back the stock to close their position, which actually creates a lot of buying pressure in the stock, which is why we've seen this stock go up so crazy. Now, when a lot of these short positions get hit with margin calls and they all have to buy back their positions to close at the same time, that's when we see what's called a short squeeze, which is when all of that buying pressure on the stock will push it up higher, and people who have maybe higher price points for their margin call, those will get hit eventually, and it's just a vicious cycle of the stock rising and shorts getting stopped out. So if we go over and take a look at the GameStop chart on FinViz, we can see that their short float, which is the percentage of shares versus their float which are sold short, is 140.57% at the current time. Now, this might be a little bit outdated, but you might be thinking, how can you be short over 100% of a float of a stock? So we can see that the float of the stock is about 50 million shares. So that means that there's about 150 million shares sold short on GameStop at the current time. Now, it is theoretically impossible if everybody is following the rules for this to happen. This should not be allowed to happen. This is done through something called naked shorting. So if we come over here, we can see that naked shorting is the illegal practice of short selling shares that have not been affirmatively determined to exist. So basically what that means is, say there's a broker out there. Say, for example, it's TD Ameritrade, and they have, let's say, 50 shares of GameStop that all of their clients have. So what they can do is the maximum theoretically of shares that they can lend out for short selling is 50 shares. So what they're actually doing, now I'm not saying TD Ameritrade has actually done this, I'm just using them as an example of a broker that we all know. But if they were to be engaging in naked shorting, they would actually be lending out let's say 100 shares. So they are lending out all 50 of the shares that they have, plus an additional 50 that they do not even have. So that's why we can get these massive short squeezes, because there's such a high short float. Now, I want you guys to keep in mind something. So this is not going to last forever. This GameStop rally will end at some point. So if you are riding this GameStop rally all the way up, I urge you to be very careful in the coming weeks of what is going to happen with this stock. The large institutions and hedge funds have a massive winning streak over 50, even maybe 100 years of winning in this market, and they are not going to let this go. So eventually, GameStop is going to come down. We don't know when, and we don't know how much, but this valuation is absolutely insane right now. Before we get into some of the other companies that are currently experiencing a short squeeze and could experience a larger short squeeze in the future, I want to go over how I believe this is going to fundamentally change the market in the coming future. So there are massive short selling firms such as Citron. And as a lot of you guys know, Andrew Left is a very big face of the short selling world. And what they do is usually when they initiate a short position, they put out a report, and a lot of the time they blast it out on Twitter. So what happens is, say, for example, GameStop is going up here, and Andrew Left comes out and says, GameStop is a terrible company, it's trash, we value it at $20 a share when it's currently trading at $142. They tweet it out, a lot of people see it, and a lot of people sell off. So they're basically, what they're doing is manipulating the market. Now, it isn't technically market manipulation because they are protected by free speech, and we see analysts upgrades and downgrades all the time. But I think what we're going to see in the future is these massive short sellers are going to be a lot more cautious with broadcasting their massive short positions out in the market, because we could just see Wall Street bets band together like we've seen here and absolutely annihilate their short position, causing a massive short squeeze in the companies that have such a high short percentage of float. We also saw today that Melvin Capital is officially out of their short position in GameStop. They had a massive short on this company, and they no longer are in that trade. So GameStop is now down after hours about 16% after going up 134% in one single day. So it is possible that this short squeeze is over. We could still see some buying pressure coming on and off before this stock stabilized. Right now, this price level and the actual price of GameStop is incredibly unstable. We're going to see it massively fluctuate a lot over the next couple of weeks. But overall, this is a company that you really need to be careful about. So if we come back over here, we can take a look at another company that has experienced a little bit of a short squeeze so far. This is going to be AMC Entertainment Holdings. Their short float is 36.58%. Now, that's usually very high. When you compare it to GameStop's 150% short float percentage, it's just absolutely ridiculous how it's gotten that high. Now, we also have Bed Bath & Beyond with a short float of about 67%. That's also incredibly high, and we saw it absolutely rip up. I don't think that these companies' short squeeze is over yet, like GameStop's might be, but you're going to have to be careful in the future if you are planning on investing in any of these companies. So that's going to be it for this video. If you guys enjoyed what I had for you in this one and you found value in learning about what short squeezes are, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible, and you get to stay up to date on all of your favorite stocks and learn about a couple of new ones. So I hope you guys had a really profitable trading day, even though it was a very tough day, but I'll see you guys in the next video.